I'd be careful about Greenspan's prognostications, but he is right about that. The labor market's very tight, Becky. 50-year low in the unemployment rate. Claims kind of show the same thing. So labor market's very tight. However, there is very modest wage growth, and inflation isn't an issue. The 3-month rate of change on the core CPI is back below 2%. I want this Fed to let the economy run hot. Don't hike. That's not, I don't think, Greenspan's view, or Yellen, or Powell, or others, but that's what I would do. Let it run.
What happens if they just keep raising rates at the very modest pace that they've been doing?
Well, they raised rates modestly from 04 to 06, 17 times, 25 basis point increments, and it rolled the economy over. So, gradual is relative. And the forwards are telling us that the Fed is aggressive. Clearly, we're at very low rates, but I would just let it be. Let it be. Get some inflation. Let yield curve re-steepen. Follow the forwards higher.
This Fed chairman doesn't seem to care what the president says about it, probably doesn't care as much about the markets, although he is a student of the markets. A little bit of rumbling probably is not going to concern him at this point. Look,
my old boss, Paul McCulley, was on yesterday, and he talked about, having a more democratic approach. I don't see why the presidents of the banks can't be confirmed by Congress. The Fed is not immune to political criticism, and it shouldn't. It's responsible for things, partly of which they could control. But a lot of what the Fed has done, and started partly under Greenspan, but certainly under Bernanke, has put a big target on its back by the QE and everything else. So the Fed has put themselves in this spot.
Greenspan just popped that narrative that Trump's the first one to ever.
I'm not really sure. I remember Nick Brady bashing Greenspan at his breakfast.
I know. He just said every president has done it, even sending letters.
Look, Reagan used to do it to.
And H.W. did it to Paul McCulley was your boss?
Yeah, he hired me to the street.
How did you end up like you, and he end up like him? That's, although he's an enigma. I saw that yesterday. Yeah. He seems to be saying Trump's right about not raising.
Yeah, Paul's a sharp guy, but
you don't know what he's.
I agree with on. I agree with him on. But look, the thing is that the Fed got into parts of the market and has done things it wasn't supposed to do, and what they're finding is it's very hard to get out. Kind of like the Roach Motel, easy to get in, hard to get out. And that's kind of where monetary policy is. And it's the same thing in Europe and in Asia as well. You have to wonder, where are rates in Europe going to be when the next recession hits? Are they going to be negative? Not inconceivable. Are they going to be close to zero? Probably.
To Rick's point, we just talked a little bit about divergence with the economy here still going on pretty strong relative to what you've seen around the globe. Can that continue?
It can continue as long as the dollar doesn't strengthen dramatically. We've seen dollar EMFX weaken. But
well, if it does continue, wouldn't the dollar strengthen?
Absolutely, yes. It's not sustainable. You cannot have one industrialized economy perform as well as it has from a growth perspective, as well as from equity returns, and the rest of the world effectively moving in an opposite direction. So it is not sustainable. But part of those trends that we're discussing are Fed-led. Yes, the Fed is going gradual in its own mind, but what are the central bank is tightening? And therein lies the crux, is that everything is relative.